Okay, we're live.
Okay.
Hi, I'm Chris Wassel. I'm from the Foundation for Ichthyosis, and I'm joined tonight for our Ichthyosis and Insurance call with Colleen and Nicolette. They're ichthyosis, or excuse me, insurance experts, and they're joining us here today to give us a basic understanding of the insurance industry, answer some general questions that we have from our community. But you know, you can post questions in the Facebook side, and I'm going to pop over and present them to them so that hopefully we can get your questions answered. And of course, we have Jolie, who is one of our super moms at First. She has a lot of personal experience with insurance and ichthyosis, so she's going to give us some stories and things that she, handled there. So without further ado, I'm going to have Nicoletta and Colleen give us our general background and terms, and then we'll get into the questions. So welcome and thank you.
Great. Thank you, Chris, for having me. I appreciate it. Just a little bit of background on myself, and then I'll ask Nicoletta to do the same. I've been in the insurance industry for, let's just say, over 20 years. I'm not going to get specific, but it's been a while. And I've always worked with employer health plans. So I've never worked for a carrier. I've always been representing employers to the carriers, helping them negotiate their contracts and purchase their programs and putting them together, and then educating and communicating that information to employees. Nicoletta and I actually had worked together, oh my goodness, I guess almost 10 years ago now. And so our careers have kind of come in and out from each other. So I thought she would be a great help today, because now in my career, I focus more on the compliance side of insurance. So I really focus heavily on the regulatory side of things, whether it's on the state level or the federal level, whereas Nicoletta is still extremely active at the employer level. So with that, Nicoletta, do you want to give a little bit of a background?
Sure. Hi, everybody. Thanks for having me. As Colleen said, I've been in the industry for over 10 years. I currently work with companies and help their employees with benefits. So anything from claim issues or anything like that. So I thought it would be helpful to kind of come on and give you some background and maybe what goes behind the scenes with the carriers to kind of give you a little bit of a better understanding as to how claims are processed and paid, and hopefully help in any way I can.
Awesome. So one of the things that Nicoletta and I thought would be helpful is, first, we want to make sure that we kind of set the stage for our discussion tonight, because one of the things that we've learned in our careers is that there's a lot of terms in the insurance world, and you as all being consumers of insurance, that kind of get mixed up and certainly misunderstood. And there's a lot of terms that have multiple meanings. So I thought it would be helpful for us today to just kind of start with some basic terms or some basic definitions. So our discussion that we're going to have is really going to be starting from and focusing on the employer side of things. So what I mean by that is it's group health plans that are sponsored by employers. Now, employers can obviously be as small as 2 employees and can be, thousands to hundreds of thousands of employees. And in each one of those markets, the mandates are different, whether it's at the state level or certainly there's federal rules as well for different markets. But one of the things that I think is also important to focus on is the type of coverage that's out there. So almost everybody these days has what we call a consumer-driven healthcare program. And what that typically means is that you're going to experience some kind of a deductible or some kind of payment up front before co-insurance takes place. So the deductible is going to be whatever that dollar amount is for you as an individual, and that could be something like $1,000, or for your family, it could be $2,000 or $4,000. It's the money that you pay up front first before your insurance starts to kick in. Once your insurance kicks in, then that's called co-insurance. And there's plans where it's covered 100% after you've satisfied that deductible up front, or there's a percentage. And that could be that the plan pays 90%, the plan being the insurance company, and you as the consumer pays 10% up until a certain dollar amount. So the reason that I want to point that out is because a couple of the questions that we had seen that Chris had shared with us prior to today's call was really helping people understand how to maximize your insurance, but also how to maximize what you got to spend out of pocket, because most people have to spend something up front. So, how do you spread that out if that's better for you and your family, or what are the benefits if you deal with that up front? One of the other things that I think is important for our discussion today is also focusing on the types of insurance, meaning from a funding perspective. So from a funding perspective, there's two types of plans out there. There's what we call fully insured, and then there's what we call self-insured. So I'm going to pause there for a second because this is really more of Nicoletta's world these days. So I'm going to ask her to explain the difference.
Sure. So fully insured is where the premium is set. So the plan costs a certain dollar amount to the employer, which is then subsidized by sometimes employee contributions, but it is a set dollar amount. And no matter if the plan is used a lot or a little, the price is what it is. Why that's important is because typically those type of plans are set in stone, they're built and they're filed with the insurance, the Department of Banking and Insurance. So there are very little customization that goes along with those type of plans. So they have contracts and they have ways that they process claims and process prescriptions. And it's very hard to kind of navigate those because they're pretty set in stone and they're not very flexible. Now there is self-funding, and those you'll see the larger employers have self-funding. And the reason that is important is because the plans are very customizable to the employer, because the employer pays a fixed cost, which is an admin fee, but then they essentially pay for what their employees use. So if they use a lot of insurance, they'll pay a lot. If they lose a little bit, they'll pay a little bit. And the reason for that is it's very customizable, but also the employer could decide to cover something. So essentially, if it's not typically covered, the insurance carrier can go to the employer and say, Mr. Employer, would you like to cover this? And they can, at that point, say yes or no. Where fully insured, it is either covered or not. So that's a big difference. So no two plans are alike, where you may have a friend with a similar situation, but they may have more things covered than you. And that would be why, because plans are very different in that aspect.
So the other thing that's important to know between fully insured plans and self-funded plans is, in the self-funded world, they're not required to follow state mandates. So if you're in a particular state and where this comes into play a lot, has to do with really contraceptives. There's a ton of other things, but that's the one that comes to mind here in Jersey, where the state says that you have to cover that, but in a self-funded world, you don't. So in a fully insured world, they have to follow state mandated rules and regulations, where self-funded plans do not. Now, both, regardless of whether you're fully insured or self-funded, have to follow federal mandates. So they have to follow the ACA rules, but again, they don't have to follow what happens at the state level. Now, that's important too, because as Nicoletta was saying, the fully insured plans are filed with the Department of Insurance at whatever state that policy is written out of. So the flexibility isn't there as much as she was saying. However, one of the things we're going to talk about is, well, how do you work within that type of environment then? If you're working for an employer that has anywhere, the small group typically is for an employer that's under 50 employees, and a large group is usually 51 plus. And then you have what we would call, I guess it's really middle market, but then you'd have like your large employers, as Nicoletta was saying, for self-funded, and they're going to be your employers that are closer to 1,000 employees. So they're going to be like your big retailers, things like that. There are more and more middle-size employers, and I'll define middle-size as like the 50 to 200 range, that are having some partially self-funded plans. And that's important because they have to follow state mandates, but not all state mandates. So there is a little bit of flexibility with those plans too. So we point all of this out because, as Nikki was saying, you may have someone that's in a similar situation and they may be able to get something covered that you can, or you might be able to then navigate the system a little bit differently based on the type of plan that you have. So it's important to understand that, and you would know that when you're receiving your materials from your employer, like during your annual open enrollment and things like that. It's going to tell you the type of plan that you have. So having said that, Nicoletta, how about we get into a couple of the topics here? So the one thing that I wanted to make sure that I point out to everybody is, as Nicoletta was saying, there's a lot of nuances at the plan level that determines the outcome for claims payment. So everything we're going to be going over is just going to be general. We'll note if we think there's something that's more specific to a self-funded world versus a fully insured, but the majority of what we're going to be talking about are just ways that you can kind of navigate the healthcare system to help with some of the roadblocks that you may have been experiencing as you go through your journey with healthcare. So one of the questions that we had seen is, we'll start first, I think, Nicoletta, with pharmacy. That's probably a little bit easier. There's a little more to talk about with getting other items covered. So on the pharmacy side of things, one of the things I was sharing prior to coming live was I use a compound pharmacy for myself for a medication that I have to get. The thing to know about compound pharmaceuticals is not all insurance policies cover it, but some insurance policies may cover some components of the compounding that you're getting done. For myself, I work with a specialized pharmacy where I get a compound prescription done. It is not covered by my insurance. However, I'm able to submit a claim form to my insurance, and I get 80% of the cost of that compound pharmaceutical back. So the thing here is, one, obviously check your plan. Always do that first, because if you're fully insured, if you're self-funded, you may have a more robust prescription program than someone who's fully insured. But also, if you are out of pocket for whatever your particular prescription is, you can always submit a claim form. You certainly run the risk of it being denied and have to run through an appeals process. But compound pharmaceuticals, though, typically can get covered through that claim form process. Maybe not 100%, but you can get some form of reimbursement. So you definitely want to make sure that you exhaust that avenue too. Now, one of the other questions was, well, what about prescriptions that are prescribed that may not be on a formulary list? So, Nicolette, I'm going to ask you to just talk about a formulary and then talk about how do you get prescriptions approved, what the process is, if it's for a condition other than this particular condition, and just out off the formulary in general.
Okay. I'm going to piggyback on what you were saying earlier and then kind of blend into that. So another thing I want to mention too is, if you have a prescription, especially a maintenance medication, meaning that it's a medication that you're going to be using long term, one thing that is good is to check all of the pharmacies, because not only do your insurance carriers have negotiations with pharmaceutical companies for certain prices, so do the pharmacies, your Rite Aids, Walgreens. So you may have a prescription that is actually cheaper at a Rite Aid than a Walgreens. Yes, the Rite Aid might be closer to your home, but if you drive maybe 10 more miles, you can get it a little cheaper. So you always want to shop around for those medications, because you might find it cheaper at one pharmacy versus another pharmacy. So just because you go to the one closest to your house because it's most convenient, it may not necessarily be the best cost effective. So always shop around for your medications. That goes for anything really. So also with that said, so every carrier has a formulary, which is basically a drug list, and it tells you what drugs fall on each carrier. So a lot of your insurance companies, you'll see that you have 3 tiers typically is the most common. So you'll have your generic tier, your preferred, and non-preferred. So it's your cheapest, the middle, and to the most expensive. With that said, you may have a medication that your doctor recommends that is not on the pharmacy listing at all. So what you will want to do is request a prior authorization. Now, it may get approved, it may not. Again, this goes back to what Colleen was saying, with depending on your insurance carrier, because when pre-authorization happens, it's a behind the scenes with the insurance carriers. And what happens is your doctor has to file paperwork, essentially your clinical notes that says, we've tried this medication, we've tried this medication, neither of them work, we would like to try this. and they have to send it to carriers. All of the carriers have medical professionals behind the scenes. So they have doctors, nurses that review all of the clinical notes and go back and forth. And also they do peer reviews. So your doctor may call their doctor and have a conversation as to why they think that this particular medication will work better because the other ones didn't. So that might be a way around getting a particular prescription covered, specifically if the prescription is not necessarily known for a specific ailment. So there might be a prescription that is typically covered for something completely different. And that is just what is in the clinical notes, but it is important to go through the process to see if it can get approved. It may work, sometimes it may not, and this where it comes into being self-funded. There are instances where your employer may say, we will go ahead and cover that prescription for that person. So yeah, I would always recommend though, always, like Colleen was saying, always submit a claim form. The worst case is they'll say no, but sometimes you might get some of the cost covered, and that's really important. Because a lot of times if you don't ask, you're always going to be told no, right?
That's true. That's certainly what I tell my kids, and then they use that against me. The other thing, Nicolette, we were talking about before, could you just go over for everybody the term and the process of step therapy for prescriptions? Because I think that's something that would be helpful for everybody to understand.
Sure. Yes. So there are certain insurance companies that have what they call step therapy. So your prescription that you're trying to get may get denied, but you may look it up on, and say, well, it's on the formulary. How come, I can't get it? And it could be because your particular plan has what they call step therapy. And what that is you need to try certain drugs before that particular drug is allowed to be filled. So in most cases, it's a generic. There's usually a generic version of a drug. So what they say is you need to try this generic first. If it doesn't work, then we will allow you to try this brand drug. So that is what step therapy is. You have to go through a specific process in order to maintain or get that particular drug. And again, it kind of goes back to the pre-authorization. The doctor has to prove that the previous drugs or the generic drug didn't work.
And with step therapy, that also varies by carrier, meaning the steps that you would have to go through. So you may be with Aetna today, let's say, and have a particular prescription that's covered, and maybe you only had to try 2 prescriptions before this one was approved. However, you may move to Cigna or United Healthcare or fill in the blank with whoever and find out that you have to go through a 5-step program. So it is going to vary by carrier and obviously by policy too, as Nicolette was saying earlier. The other thing I think for prescriptions that's important is most policies these days that I recall, Nicoletta, almost all of them have a generic has to be filled first prior to a brand, regardless of a formulary being in place. However, your doctor can still write on the prescription for the pharmacist to dispense as written, and they still have to follow that. So if your doctor writes a prescription for the brand and doesn't write the DAW on it, then obviously they're going to give you the generic. If you go with the DWA means dispense as written, then the pharmacist has to do that. So it's just something else to remember. The other thing too, Nicoletta, when you were talking about just a good tip in general about shopping for prescriptions, here in New Jersey, there's actually a website that you can go to that does the shopping and comparison for you. That's, as far as I know, Nicoletta, that's still up and running, isn't it? Or if it isn't, we could do some research and send it to Chris and Jolie, and maybe they could share that with their group. But the other thing,
I was going to say, Colleen, you're not talking about needy meds or Good RX. I know there's
no.
some.
Well, those are other programs, but what we're talking about here, as Nicoletta was mentioning, like your Rite Aid, your Walgreens, ShopRite even, has pharmacies. Each one of those, CVS, they all negotiate their own pricing with the PBM. So that in itself can be different than, as Nicoletta was saying, what happens with the insurance carrier. So almost all of them, I know Target, Walgreens, I think Rite Aid does. Walmart does. They actually post all of their drug list online. So you can go and see, and all of them have free generic lists too. So it's just another way, as Nicoletta was saying, that if you have a maintenance prescription, just in general, or you need an antibiotic for something, almost all of them have them free on those lists. So you don't have to run every single thing through your insurance per se. You can go to those different pharmacies and you can look it up online first, and you can see where it falls, if it's on the free list or if it's within whatever the category is for that particular drug. You can see what the cost is. You can do a comparison. The reason that's important is what we were talking about in the very beginning is you may be facing a deductible up front. You're going to have some level of co-insurance. So you want to figure out what's the best way to maximize the money that I do have to spend, or how do I stretch that benefit, as much as possible. So those are some of the ways that you can do that.
That's excellent information. Very helpful, because so much of what I know our members pay for is out of pocket or not covered in some way. So we always like to save money, I'm sure.
Sure. And I think I was sharing this with Jolie when she was asking me a question a couple of weeks ago. It's a little outside of our particular conversation right now, but flexible spending accounts are really important because it allows you to take pre-tax dollars, set them aside to reimburse yourself for medical expenses. And it's not just medical when you think about, like, I went to the doctor and had some kind of a procedure or a visit or something. It also includes dental and vision care as well. But the reason I mentioned that, and I was sharing this with Jolie, is there are several items that you may not be able to get reimbursed for through your insurance, but at least if you're doing it through a flexible spending account, the benefit to you is that it reduces your taxable income and it allows you to set this money aside to reimburse you for certain expenses. Now, that's important because it's things that you might purchase every day. If you wear contacts, it's your contact lens solution, it's your eye drops, Band-Aids, as I just, had to go get one because I have a paper cut. But all of those kinds of things that are, just your daily routine things that you're going to keep in your medicine cabinet, you can get those items. You can reimburse yourself for those items through those kinds of programs. And the benefit of that, as I said, is that it really reduces your taxable income and allows you to put that money aside, reimburse yourself with those pre-tax dollars. The list is extensive. So, and it's a lot of over-the-counter items. And that was updated during this entire COVID period to include all kinds of additional things. So it includes feminine products now where it never did before. So all of these things are reimbursable too. So things to just think about that can, again, help you with, the money that you're already spending today. So getting back on topic, a couple of the other things that I had seen in here that you had sent over, Chris, some of the bigger items like durable medical equipment in general. So let's spend a little bit of time and talk about that. So I know Jolie and I, we were talking about a humidifier, like how do you or can you get a humidifier covered by your insurance? So as Nicoletta was sharing, this is where a self-insured plan versus a fully insured plan is probably going to make a difference. Humidifiers typically aren't something that you can get covered unless there's a reason that you can establish medical necessity through a pre-authorization process, which is what Nicoletta was talking about even on the pharmaceutical side. So Nikki, do you want to talk a little bit about that even on the medical side, how that process works?
Sure. Most plans, even fully insured, have a line item, and it's a covered service. It's called durable medical equipment. And typically it needs prior authorization if the fund, and it's typically around $500. If it's $500 or more, it needs to go through a pre-authorization process to determine if it is truly medically necessary or not. So what happens, similar to what I was talking about and on the prescription side, is the doctor has to write their clinical notes, send it over, and make sure that it is truly needed for prior authorization. Now, for most plans, and I see this on both the fully insured and the self-funded side, durable medical equipment is typically only covered at a percentage. So even if you have a very, say, rich plan, so let's just say, you have a spouse that maybe works in a union and they have the old-fashioned, $10 copay plan. Typically, the durable medical equipment is still covered at only a percentage, and we see a lot that it's only a 50% coverage. So we just want to keep that in mind, that it is very common to not have the durable medical equipment covered as a whole. So, and I know Jolene has a specific example of something that she has worked on that has helped her kids specifically. I don't know if you wanted to kind of mention that.
Sure. Yep. I think everybody out there, or many people, have heard Sean talk about when we were able to get the Jason Micro Silk tub, the cost of the tub, part of it covered as a durable medical good. He did work for a large employer and he did have a really good plan. We had to provide a lot of Portia's medical records to substantiate why she needed this one specific tub. But we were able to get partial coverage for the tub following these procedures that Colleen and Nicolette were talking about. But he did actually take the extra step to go to HR and get their support through it, because I guess it was self-funded, right? Yeah.
Yep.
So a self-funded plan that they were able to call, I think it was Aetna at the time, so a national carrier. They were able to call Aetna. It was a national company that he worked for. So, and we're able to get the approval for the purchase of the tub. The installation we had to pay for ourselves, but the purchase of the tub itself. And if anybody has questions, they can reach out to Sean. He's always happy to discuss.
And I just wanted to mention too, on our website, that article, there was an article that Sean and Jolie put together for people to see, they went through the steps of how they got the tub partially approved, just to refer to it there. And at the top of our website, there's a little search bar. You can just type in there like tub insurance approval or something like that, and you'll see the article.
But I would
So-
just say, I'm sorry, if I could just,
Sure.
this is not the nano bubbler. This is the Jason microcell. So I know there's conversations about both. This is just the Jason.
So-
Would the process be the same though, Jolie, do you think?
I can't speak to the nano bubbler. I'm not sure.
Okay.
So that's what I was going to suggest that we kind of talk a little bit about next. So even though there's more flexibility for approval of those items in a self-funded plan, which sounds like was the plan that Sean had with the employer that he worked for at that time, that doesn't mean that you're not going to have any luck on the fully insured side if you worked for an employer that's only got, maybe 20, 30 or 75, employees. Really what's going to determine that is going to be the carrier that you're with, of course, and the medical necessity, and whether or not going through that process of medical necessity and then pre-authorization gets approved. So the process would be the same as far as going through the claim form, any information that is needed to substantiate the need, medical records, and Nicolette was going through some of that too, with the pharmaceutical side of things for the step therapy programs. But it would work the same with any of these other medical items that you are looking to see if they would be reimbursed at some level on through your insurance. The key though is that it's reimbursed. It's not something that you are likely to have covered up front. So there is the out-of-pocket first, and then you're going to go through the process of reimbursement. And to Nicoletta's point, the reimbursement level is going to be at what the plan level benefit is anyway. And depending on the plan, that's going to determine the reimbursement. Could be 50%, which Nicoletta was saying is what she typically sees. Jolie, I think you said yours was a little bit more than that, maybe, but still not. Maybe not 100%, still wasn't 100%, but you're right, some percentage. So that really applies for anything that you're looking or to seek some kind of approval for. Pre-authorization is really always the route to go. One of the things that you do have as an option as a healthcare consumer with these carriers is you can always request a caseworker. So they have, they have client, I forget the exact term, Nicoletta, but they're like client service managers kind of things, right?
Case management, yeah.
Case management, that's the word, thank you. You could certainly request that, and then they would obviously stay with you as you go and navigate through the plan. Now, your HR department, as Jolie was saying, they're always a resource. Your HR department is going to work with your insurance broker for your employer to get through that process. The more people that you have working obviously with you on that, the better chances that you are. But the one thing that Nicolette and I say all the time, all the years we've been doing this, is no matter what you do, document, document, document. And Jolie, you've heard me say this before a million times, because the more that you do that, and the more information that you submit at the beginning, the more likely you are to go through the process a little bit more smoother, and certainly a little bit more faster than if you're just submitting a claim form with limited information attached to that.
I just want to jump in, Colleen. Another resource could be, so Colleen mentioned, obviously you as a parent or spouse or family member as an advocate, you have the HR department, and then there's case management at the actual carrier, but also your employer typically has a broker that is helping them put in their plans in place and helping them. And that is what they're paid to do, essentially. So that is what I do. That is what I work for. I work for a brokerage firm. So contact HR and see if you can get in touch with your broker, and they'll have a staff also that can help you navigate through, because it can be overwhelming and it can be a lengthy process, especially all of the reimbursements. So if you're paying out of pocket and then asking to be reimbursed, sometimes that can be, a multiple month process. So it can get overwhelming, it can get frustrating. So reach out to other people that kind of navigate this system on a daily basis and kind of help you.
So you said a word, Nicoletta, that made me think of something else along those lines. You said advocate. So most employer, or a significant amount of employers these days, have advocacy services as an added benefit. So those are going to be companies like, a big one is Health Advocate. Another one is Touch Care. Another one is, I think it's Connect Your Care, I think. Their sole job is to help cut through the red tape at insurance companies and help you work through these processes. So in addition to your physician going through the pre-authorization process, you can also have these specialty advocates work on your behalf as well. In addition, they also can help you with negotiating out-of-network invoices that you may be receiving for services. The other thing too is a lot of employers have EAPs. EAPs are employee assistance programs. They're typically attached to a long-term disability plan. So EAPs can also help with some of these things. It just depends on the type of program that an employer has purchased. So take advantage of all of those resources, because in many cases, your employer is paying for them at 100% of the cost. So you pay nothing, and you have those services typically available to you. But a lot of instances, I don't think employees really fully understand how to maximize those services. So you definitely want to take advantage of that. So, ask your employers if they have those kinds of services. Many of those types of companies, you can also purchase some of these things on your own. Some of them have direct to consumer programs, and they're pretty inexpensive from the perspective that you're not talking thousands of dollars. I mean, it could be, you could cover your family for like $30, $40 a month, depending on, what you're looking for. And a family could be as many as it needs to be. It's not like only a family of 4. So those are just other resources that you could have available to you. You just may not know it today, but those are things you would want to ask your employer about, or take a look at the benefit packet of information that you have access to and see if any of those kinds of programs are in there, because those certainly are resources that can help you navigate these different items that we're talking about today. Okay, so Chris, I think I've covered most of the items that we were talking about so far, but do you have any other questions that have come in, or any other topics that you'd like us to elaborate on?
Every question that came in has been answered. There, of course, true to Facebook form, there's some issues on the Facebook side showing up. So that's a little bit of a struggle, but I did want to just go through and touch on all the highlights that you mentioned here, because it's you've covered so much, and there is so much more to learn, I'm sure, but everything that you touched on here, I think is really going to be helpful for our members, because I get these calls all the time from them, and it's very difficult to answer specifically, as you said, but I think you've given some really helpful hints. I mean, shopping around at pharmacies, you might have to submit a claim, if you purchase something and then submit the claim and fight for your rights, right? The durable medical equipment, even though it's not covered fully, it might be covered as a percentage. So that's worth fighting for. The formulary drugs, there's usually 3 tiers. Some things are covered, some are not. And the step therapy, I know when you mentioned that, in terms of advocacy from a first perspective, we go to Capitol Hill. Well, this was before COVID, but we do it virtually now, to fight the step therapy process. Because as you know, it would be awful if someone's skin is suffering for 3 months as you go through all those different steps, and you know
Sure.
that last drug is going to actually help you. So it's part of, fighting the insurance, but also getting the doctor to be your advocate too, from his perspective. So that's really important. And we'll continue to fight for the first members in that regard, because that comes up every single year. As I mentioned a little bit earlier, it was something different than what you had spoken to, but the GoodRx and the Needy Meds, both of those websites, they compare prices. You
Mhm.
can get discount programs, you can get compassionate care use for certain prescriptions. So there is a lot out there. It's just to, really know where they are and to go get them. The family spending accounts, you said that's very important to try to do that and cover those non-prescription items. Check your insurance documents to see if they have an insurance advocate that you can utilize, and document. I know that
Yes.
Jolie mentioned that too when they did the tub. She and Sean, they had tons of documents. They were ready for a fight, but now the tub is in their home and they're using it. So, and we get that call at least once a week, either online or into the office. So it is a lot to absorb, but luckily this is recorded and it's going to live on our Facebook channel. So, even if you don't need it right now and next year you do, it would be great because it'll be there. And but I think that was what I had. It was very thorough.
I see there is a question I can see from Facebook, because I'm
Okay.
watching us as we're doing this,
Okay.
from that they're asking, do you have any experience or know the process for getting insurance to cover newly FDA approved treatments? Does this fall under prior authorization? That's all it says. If that makes sense.
So I can say from my side of the table, it would go through any other pre-authorization process as any type of established treatment that would be out there. Now, the difference is if it's something that is new, and we experience this on a daily basis with all of the regulatory changes that have been coming. If it's something that is new, then you're waiting for the insurance side of things to catch up, meaning administratively, how are they going to put this in place? How are they going to monitor, track it, all of that. So even if something is newly approved by the FDA or it's a new law that gets passed and insurance carriers have to cover something new, typically they have 90 days, depending on what the category is, to institute those types of changes. So even if something says, it was approved on February 1st, that this is a new FDA approved whatever, prescription therapy, something, the insurance carriers do have a period of time to actually put that in place. Now, claims go retroactive to when that was actually installed, but you may find that the newer approved types of services are going to take a little bit longer as you go through the pre-authorization process, because what we call CPT codes, those are the medical codes for billing purposes, like none of that exists yet. So all of those things have to get into the system, or it's recoding existing codes so that now something else now gets added to that. It just takes time, unfortunately. But the pre-authorization process is the only way that I would know of to get that done. Is there anything else you would add, Nicoletta? What's your experience?
No, and no, I think you hit the nail on the head, but just kind of piggybacking on the CPT codes. So the one thing with the insurance carriers is when you are there for services, whether it's at your doctor's office or you have an actual, hospital claim, the insurance carrier isn't there with you during the service, so they can only go off of what is submitted to them via paperwork. So I always tell my clients that when they receive a large bill, don't just assume that it's accurate and pay it. Take a look at it, call the, the advocacy help that we just mentioned, your broker, your HR department, and if it seems a little off, it most likely is. So you want to just double check everything to make sure that it was submitted properly, because as you know, in doctor's offices, there's the doctor that actually sits with you and physically talks to you about your care, but there's a different person in the office that's actually submitting for the billing. So sometimes it's human error, sometimes it's just the wrong CPT code, something as simple as that. Same thing with the hospital. So a lot of times you'll get double billed for things by accident. So you want to always just double check before you go ahead and write a check off to the doctor or the hospital. You just want to make sure that that is actually accurate, because the CPT codes and the back end that Colleen was mentioning is, it's just very systematic. So when the insurance carrier gets it, they won't know any different than what they're actually seeing on paper or now electronically, since a lot of this stuff is computerized. But so a lot of times we get frustrated at the insurance carriers, which can be justified, but they can only go based on what they're actually seeing. So that's why it's important to just kind of document everything. So that way the doctor, you, and then the insurance carrier are all communicating in the same language.
That's a good point. The other thing, Nicolette, when you were just saying that, it made me think of was billing in general. And I think, Chris, you were even talking about this prior to us going live, that often you'll receive something that says really big and bold, this is not a bill, but people see that and they're assuming that that's what they're going to actually receive an invoice for. So we started the call off by talking about the type of insurance plans that most of us as consumers probably have, which are those high deductible health plans. The one thing that amazes me, because these plans have been around for a long time now, that physicians or facilities don't submit those to your insurance carrier first, and they ask for payment up front. That's like a number one rule 101, when it comes to insurance processing of claims, that it has to go through your insurance first. And the reason for that is you want to benefit from the negotiated price that your doctor, whatever the facility or the doctor is that you're at, the negotiated price that they have with your insurance company. So just rule of thumb in general, as a consumer of healthcare, never pay the invoice up front when you get it. And always, 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 whether it's pharmacy or facility, should go to your insurance company first before you ever write a check. And that's something that I think we've all gone there, and you see at the doctor's office, or you're going to, that says, payments due at time of service, or you're going to be signing a form in your, your new patient packet that says, this is my financial, agreement that I'm signing off on. And there is some truth to that, from the perspective that, yes, they are expecting payment at time of service, but that's once it's been run through their insurance. And the reason for that is because that's why provider contracting exists. It has to go through the insurance first, based on the contracts that they have that they've executed with those insurance companies. So they have to also, in order for you to make your payment, they have to do their process as well. So I always love when those claims come in. They say, well, you signed a financial agreement that says blah, blah, blah. Yes, that's absolutely true. But you signed an agreement as well that says it has to go through the insurance company first. So just,
I
I
always thought those payment at time of service was the copay. I never,
not always.
I do get those. Yeah. I do get those bills, but it's in tiny, tiny print that says this is not a bill. Well, I know,
Yeah, it could be like Colleen was saying, because now consumer-driven plans are so popular, meaning they have deductibles. And then after you hit your deductible, there might be copays, but if they don't run it through the insurance, they might not know that. So they may see that you have a copay on your card, but not see where it says you have a deductible first. Or sometimes the card is, because they're so small, they're limited. Right. So you might not know. So they may ask you for your, $50 copay, yet the service is actually subject to your deductible first. So now, they can deduct it from what you owe and everything, but it just makes, more paperwork and more of a headache sometimes. So
definitely. Wow. Okay. Well, does anyone else have any other questions? Because this was excellent. And
I just want to ask two more questions, a little more technical. Just, I don't know if anybody knows any of this stuff that's watching, but just for, since we have Colleen and Nicoletta, there's no difference in coverage. I'm saying it very broadly. If you're in a PEO, then as you're actually directly with the carrier, if your employer has gone directly to the carrier, through the broker directly to the carrier, right? If you're in a PEO, all these things apply.
So that's an excellent question. So the purpose of a PEO versus just working for a single employer is the buying power of the PEO. So what Nicoletta...
Let me just say, could you please define PEO for our audience?
Sure. So I knew you were going to ask me that, and I should have had that memorized. So it is professional employer organization. There you go.
Okay.
In our world, we talk all the time because it's like alphabet soup. So it's like,
Yes.
HSA could be 5 different things, but PEO is professional employer organization. And what that is it is a company that employers can pay an administrative fee to, and then they have the ability to get large employer benefits. So typically smaller employers join a PEO because all of these PEOs are together, or all of these clients are together under the PEO. So collectively, it's a bigger group that goes and has the ability to purchase insurance. So, and the purchasing of insurance it's whatever the plans that the PEOs offer. It's not like that group can come together and go shopping on their own. The PEO has already done that for them. So typically those policies under a PEO, most of those, believe it or not, and in many instances, a lot of those are, depending on the PEO, a lot of them are fully insured. Your larger national PEOs are self-funded. So that's where you could have some flexibility as far as what gets covered and what doesn't. The processes that we're talking about still apply, whether you're in PEO or you're with what we would call a private employer plan, which would be just your mom and pop regular company, but those processes would still be the same. But you may find that there is more, it's going to appear that there's more benefits that are available maybe under the PEO versus a single employer. And the reason for that is because you could have a pool of 5,000 employees versus 1 5-life employer. So to Nicoletta's point earlier, that type of plan is sold in a different market segment. So you would have probably, in many instances, there could be some more benefits that are available under the PEO that you would not have available if you were on your own as a single employer. So there's pros and cons to weigh.
Yeah, so the plan could be what we say in the industry, richer, just because it's going to be a bigger group that they're pulling from. So there's, it's just a larger population. Because though that there's multiple employers in the one group, it's not going to be flexible like we mentioned with self-funding, where you can call your HR, kind of tell them your story, and then they can approve something, because you're dealing with a bunch of company owners. So they can't just take one company owner and say, oh, can we, approve this medication or this device for this particular person. So there is no flexibility from that standpoint, because they have to, so their plans, like Colleen was saying, are set in stone because the plan is for everybody. So they don't flex it like they would in a self-funded plan because of that, because there's multiple employers within that same organization. So they can't favor one.
Yeah, and I don't know if the average consumer who's selecting their health plan can even tell that. I can tell because they can't even tell. Okay, so I didn't want to bring it up if it was going to be too deep, but I just thought I would, if someone does know.
They would know from the perspective that it would have the name of the PEO on it.
Okay.
So, so it would say like ADP Total Source, TriNet, oh my goodness,
Prestige.
all of those names would be on there. But again, the employee is only seeing the plan that's available to them. There may be 20 under the umbrella of the PEO, but it's what that employer has selected based on their size, their location, like all of those factors that we were talking about earlier. But because there's a lot of those employers that are in that bucket, in that purchasing bucket, you may have additional benefits available to you where if you were by yourself, you may not. So that's the difference. So like the perfect example would be if that employer went on their own, maybe they could only get a plan that has $50 copays, but if they're in the PEO, they would get a plan that has $20 copays, for example, because the buying power of that group together is bigger than the one.
Because in general, the thought is that the larger group smooths out kind of the ebbs and flows of the individual, right?
Yep.
Yeah. Just so everyone kind of understands how that even comes into play. And then I was just going to ask one more, maybe as kind of a closing question from Colleen and Nicolette, if you had any, I don't want to say tips, but recommendations when many people probably just went through the open enrollment period and starting their new plans Jan 1, but for the ones that are off calendar, do you, both of you have any, everyone's going to kind of choose what financially makes sense for them, but anything that they should maybe, if they have these in the ichthyosis community, since they have these special needs, things that what they want covered, anything that you would recommend that they look for when they're reviewing plans? I stumped you. They both are making the same face.
Yeah, because I'm thinking the first thing that comes to mind is always take a look at if a flexible spending account makes sense for you or not. Because regardless of what you can get covered or reimbursed under the medical plan, you at least have the ability to pay for some of those expenses with pre-tax dollars. So you're kind of reimbursing yourself for that. So, I mean, always take a look at the benefits of that. When you're looking at the different types of plans that are available to you, I mean, there's a lot of factors that come into that. You know, do I look at a deductible plan, or where I have to pay something out of pocket up front, or do I look at a traditional copay plan, which is typically like a PPO, which means you kind of can have whatever you want, but they're extremely expensive. So, you know, you have to really ask yourself, or at least Nicolette, you probably do this more than I do now, but the things I used to say to all of my clients during open enrollment meetings and even new hires, sit down and write how many times do you, your kids, your spouse, anybody in your house that consumes healthcare, how many times do you go to the doctor? How many times do you visit the ER? How many prescriptions do you have? Are they regular prescriptions, or are they just when I have, you know, a cold, I got to get an antibiotic? And take a look at that and kind of figure out, well, what am I looking at that at out-of-pocket cost? Now, with someone that has special needs or any kind of an ongoing condition, the reason that's important is because although the consumer-driven plan with the high deductible plan may sound like it's cheaper from your paycheck, but you're going to be putting more out as a higher utilizer of healthcare every time you go to use it. So it may make more sense financially to go with the higher option if your company offers that. So you really got to sit down and figure out, how do I use healthcare? How often, when, and where? I mean, that's really what you got to look at. And that'll help you determine financially which way you want to go. From a benefit perspective of the plan, Nicolette, I'm not sure if there's anything you would recommend that would help distinguish the differences for someone that has an ongoing need of consuming medical care.
I want to second on what you had just said too. When I typically talk to employees of companies, and if they have an employer that offers them multiple options, I do tell them to sit down and kind of look at. A lot of people, especially those that they know they have, you know, family members with health issues and will be using it. Just take a look at the math and try not to shy away. Sometimes you'll see a high deductible plan and get nervous and go, no, I don't want to go there. I'm going to pay my higher payroll contribution just so I can offset and have my, you know, $20 copay or whatever. But sometimes when you take a look at the overall, because every plan has what they call a max out of pocket. So that's your worst case scenario for that year. So if you look at what that is, plus your employee contributions, that total annual amount might be less than that really, really rich plan. So you might make out. So it just kind of depends on your situation. And, you know, if you have a family member with a chronic condition or something that you kind of have an idea of expenses. Sure, everything always pops up. Insurance is all about the risk. You never know. It's about the what ifs happens. So there's no perfect decision. You just have to make the best guess for your family at that time. But also I would say, when I'm also dealing with, if you do have high prescriptions and let's say your employer is, you know, coming up on open enrollment and they're actually changing to a new carrier, ask the employer, the HR department, or ask the broker that works with them, here's my list of prescriptions. Can you tell me how these are going to get covered? So that way you kind of know ahead of time. And that can also help you determine what plan, you know, if you want to go with the high plan or low plan. Also, you know, here's the doctors that I see on a regular basis. These are the, you know, especially if maybe your spouse has a plan, you have a plan, you're kind of deciding between, is my spouse's plan better than my plan? give them a list of your specialists or your doctors and say, here's, who we absolutely have to see. I have to see the specialist. My kid has to see the specialist. Is it covered? How is it covered? And maybe it makes sense to not stay on your employer, but maybe it makes sense to go on your spouse's plan if that's an option. So just to kind of ask all those questions ahead of time, so that way you can make as best of an informed decision as possible. Nothing is 100% accurate. Nothing is 100%, foolproof, but that's just kind of some of the things that I help with employees when they're trying to make decisions.
Thank you.
Wonder insurance is such a hot topic at first.
Oh.
It is so overwhelming, isn't it? I mean, there's so many things to cover, but we so appreciate your expertise, Colleen and Nicolette. That was amazing. We really appreciate you helping out first here, and thanks, Jolie, for connecting us all together.
Yeah, thank you both. I appreciate it.
You're
Oh, you
welcome.
coffee.
If there's, even after today, if there's any questions that pop up, I'm happy to help and answer as much as I possibly can, because it's not easy. And sometimes you just need to have just a direction, just set me in a direction and I'll take it from there. So Jolie, you certainly know how to get a hold of me. So I'm more than willing to help as much as I can.
We know how to find you.
Yes,
Yeah.
you do. And I know how to find Nicoletta.
Thank you so
And
much.
we are so happy to help, and thank you for asking us. This is great. Appreciate
Yeah.
it.
Awesome. Thanks, guys. Good
You're
deed. The
welcome. All right.
twinsies.
Yes.
All right. Good night.
Bye.
everybody.